It has definitely been an interesting start to 2023, with markets ever seeming to go higher and the FTSE 100 breaks above that 8,000 mark for the first time. In this video, I'm going to talk about a way that you could gain exposure to the FTSE 100 through the Vanguard FTSE 100 ETF. It has the ticker symbol of VUKE. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking Fi. I'm going to do a quick whistle-stop tour through VUKE and give you sort of what are the objectives, what does it cost to buy this ETF, what's its performance like, does it pay a dividend, and some of my thoughts on this ETF. Jumping into the Vanguard platform. Want to go have a quick look at what we offer. We know that VUKE is an ETF, so we know it's UK, so we can click on there, and there we go. So here we go. What does this tell us? Quick overview. We get what the market price is, how many stocks there were. So FTSE 100, we end up with 102, and that's because there are a couple of companies, different categories of shares. And the ongoing cost, what we like to see, keep it nice and low, and 0.9 is almost as low as we can get on the Vanguard platform. It does carry a risk category of 6 out of 7, and you can go and have a quick look at what does that actually mean, and that's basically a synthetic risk and reward indicator that the industry use for how risky this type of investment is. What are the objectives? The fund, passive management or indexing, and it is looking at tracking the performance of the FTSE 100, and that's sort of given away in its name. It's basically comprises the largest 102 companies within the UK, and as it says, it's basically trying to track that index. So price, we'll see things have been going up over the last few days. Over the last month, we are up. 3 months, continuing to see an upward trend. 6 months, little bit bumpy in around that September time, and then we're showing peaks and troughs over that last 12-month period. What does past performance look like? As we have a look at this, 2018 and 2020, we would expect things to be down in those 2 years because basically the whole markets were seeing a bit of a dip. 2021, as with everything, was going to the moon, and we've seen just a bit of a steadying off in 2022 into 2023. What does that actually look like against the USA over the past year? Has only seen a return of about 5%, and when we have a quick look at how well FTSE has done, it's been slightly more stable at an 8% growth over the past year. Let's do a quick bit on the portfolio and what it's made up of, and then where we've got different regional exposures, etc. So looking at 102 companies within VUKE, 46 billion of a market cap, and then the price to earnings ratio at about 11.1. Hard to expect. VUKE is 100% focused on the UK. Weighted exposure is showing very much cyclical stocks coming in here. So we're looking at those consumer staples, then financials and healthcare making up the top 3 sectors that the VUKE is invested into. Yeah, approximately 50% weighted into those 3 different sectors. And what are the top companies in there? So we've got the Shells, AstraZeneca and HSBC, and this is constantly changing because if you have a look at video I've done recently on S&P 500 versus FTSE 100, I think there was a completely different order. I think it was AstraZeneca, Shell, then Unilever in there. But this all depends on their market caps and sizes. Having a quick look at the distribution thing, and as you know, I love a dividend, and there we go. We've got a quarterly paying dividend, and that is running at about 3.81 at the moment, and they tend to pay in March, June, September and December, so you get a nice little late Christmas present if you're invested in the VUKE. What we do want to have a look at, and what is really important, is looking at how much is it going to cost you to hold this ETF. Ongoing charge is 0.09. That is nice and low, and that's what I like to see. And depending on what platform you actually invest into will depend on whether there are any other costs that you incur. For example, if you were to do this on Vanguard, you would have an additional 0.15 added on. But if you use something like Trading 212, where I've got links down below if you want to open an account and we both get a share each, there are no costs for owning this ETF on that platform. You just pay that ongoing charge of 0.09, and that is a bargain. Far better keeping money in your account as opposed to giving it to somebody to actually manage a fund for you, where you could just do it passively. What do I think of VUKE? VUKE has been a great ETF to be invested in over the last 12 months, something that I have done, and I've probably weighted slightly more towards the UK market than I have elsewhere because tech stocks got absolutely wrecked over the last year. Things are starting to improve slightly, so I am looking very much at a rebalancing. I'm probably looking more at investing into the US market as those tech companies start to get a little bit of growth. How much they grow, how quickly they grow will all depend on whether we have a soft landing in the US, avoiding that big recession fear that everybody had. But hopefully the Fed can manage to weigh everything up and balance it. Why don't you have a quick look at this video where I talk about S&P 500 versus the FTSE 100. Thanks very much for watching, and I'll see you in the next one. Cheers, bye.